Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning May 25th. For our Twitter and YouTube followers, as usual, it's a very brief description of one or two setups that are probably going to be made this coming week. It's much more brief than the video that we send to our regular subscribers, as well as they got about a 25-minute trade tutorial video this week as well. So if you're interested in what you learn today in this video, check us out at dynamictraders.com and check out our trial DT reports, 1 month trial from $19. And that way you can get a good taste of exactly what we do and all the content and services that you get from your DT Reports subscription. And of course, if you like what you learn, also hit subscribe if you haven't already. And as always, when I describe trading conditions, trade setups, and trade strategies in these videos, just remember I actually trade quite successfully, as you can see from this. This is from the Robbins World Cup Championships on the global derivatives for this past year. I'm up about 155%. Not too shabby for the past, that's actually about 11 months. This went from from June to June, I believe. So anyway, very practical oriented. I'm not a forecaster. I don't forecast. I identify trades with trade setups with a high probability outcome and acceptable capital exposure. And I use exactly what I teach you and what I have in our DT reports every day. Okay, let's get started. First market I want to take a look at is crude oil. And not that it has a specific trade setup next week, but if you happen to be long and you're excited about crude oil, is just be aware that we're probably at or very, very near completing a weekly high. And a weekly high would be followed by a reversal and then 3 to 5 weeks sideways to down and a correction. So I'll describe a trade strategy in a minute, but this is the weekly momentums. They're dual look back overbought. When they get dual look back overbought, we're pretty close to a price high. So, and this is weekly data, by the way, we're looking at. Next week is the ideal week to complete a weekly high. Just one of the significant time factors is just the recent weekly high to high to high is next week. So I think we might have already completed it this week. But if we didn't this week, we should by next week, and that's fairly significant. So depending on your time frame of trading, you might want to get stops real close to the market with crude oil. This is the daily data, and coming up off of the April 21st low, possible 1, 2, 3, 4, and why do I think we're in probably a wave 5 high and a weekly high besides the weekly momentum's being dual look back overbought? Well, it's this 5-wave advance and not too far above last week's high, 35.94 on the June contract, the July contract. That's the 100% alternate price projection of the net range of waves 1 through 3 from this contracting wave 4 correction, wave 4 low. So we're at a very significant price area for a wave 5, happens to be right around the higher time frame wave 4 high, swing high back in April 9th, and not too far from this parallel channel line. A real typical target for a wave 5 when you have a parallel channel, parallel line from the wave 3 high parallel to the 2 to 4 line. So our daily momentums make dual look back bear reversals. So weekly momentums bearish, daily momentums bearish near an end of wave 5 price target zone with a 5-wave advance. Real probable that last week we completed that weekly high. If not, it should be by next week for sure. That would be followed by 3 to 5 weeks sideways to down. And so the next real trade setup, real good trade setup, will be the next weekly momentum cycle when it makes the next bull reversal, which should be several weeks away. That should complete a correction followed by continuation of the bull trend. So this is just the first section up, more than likely at least, in a bull trend that has many months to go. So be aware. Weekly high probable no later than next week if it wasn't complete this past week, followed by 3 to 5 weeks sideways to down for a correction And then the real setup will be in a few weeks when we make the next weekly momentum bull reversal to continue the bear trend. Well, this is the euro, another one of my favorite markets to trade. And the euro Thursday made a reversal day high right in the ideal time target, the 20th to the 21st, to make a daily high, which should be followed by a 3 to 5 day corrective decline. And this decline should be a correction. We've already reached the 50% retracement on Friday, so the immediate downside should be relatively limited, even though the daily momentums are dual look-back bearish from the overbought zone and nowhere near the oversold zone. But here's the real setup coming up to be prepared for in the next few days. The next daily momentum bull reversal, if that is made and price is not closed below the May 14th close, that'll be a great setup on the long side to probably continue a bull trend and break out from this prolonged trading range. More than likely, this trading range has completed back in a week or two ago, May 14th, completed an A, B, C, D, E, basically a running correction, a flat correction, whatever you want to call it. And so the next daily momentum bull reversal, as long as price remains above the main low when that bull reversal is made, that'll be a terrific opportunity on the long side, and that'll probably be made before the end of this coming week. And the reason that you really want to be prepared for that and aware of it is that if we can identify when this bull reversal is made, get on the long side with very minimal capital exposure, and it should be followed, or probably will be followed, by a continuation of the bull trend to above the March high. So that could be a significant trade, and at the very least, it should be a 3 to 5 day trade on the upside. I just did a whole tutorial, special trade tutorial for our subscribers. It's almost 25 minutes long, called Trade, Don't Forecast. So again, we're looking not to forecast where a market's going to be in the future of a market. We're looking to identify conditions for a high probability outcome in the present time, which we can take advantage of to make a trade with acceptable capital exposure. So if we get stopped out, the loss is minimal and basically inconsequential, and we move on to the next trade setup. So that's it for today. Have a fantastic week, and I hope if you like what you learned, you check out our DT reports and $19 for a 1-month trial subscription for new subscribers. Take care. Have a fantastic week.